Hello and welcome everybody to today's Commodities Corner presentation by myself, Phil Carr, at the Gold and Silver Club. Today we will be covering live market analysis. We will go through a watch list of trading opportunities, a forecast of where we expect gold, silver, oil to be heading next, answering questions, and of course we will be providing live support. I will also just highlight to you that at this point in time, gold is breaking out to 3.5-month highs, so is silver, so it's a perfect time to be on today's session. We can have a look at where we expect the price to go next. We discussed this on last week's Commodities Corner, the potential for some follow-through and continuation patterns on the precious metals. So we'll definitely have a look at that very shortly. As always, any questions, any comments, please do feel free to put those into the chat. Your contributions are very welcome. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Of course, it's a pleasure to be here on binary.com today as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate a substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldandsilverclub.com. Okay, so before we get going and have a look at the markets, let me just talk you through the year-to-date relative performance of all of the commodities. So this is essentially how much they have gone up or gone down over 2017 from the start of the year up until present day on the 24th of February. The first thing you will notice, the top 3 best performing markets at the moment are commodities, and they are all metals as well. Palladium is up over 14%. Silver is up over 14% so far in 2017. So just under 2 months, silver has gone up over 14%. Incredible. Platinum is up over 12%. We've got gold, which is now up just under 9%. Gold broke out to 3.5-month highs today. Coffee is up over 7%. Cotton is up over 7%. Even though we've seen some impressive moves on the S&P 500 this year, it's sitting around 5% gain on the year. Nothing like silver, platinum, or palladium. So with that, guys, we'll move over to the charts, and I will talk you through what we're expecting, our forecast for the next big moves here, and also just talk you through how to take advantage of binary trades. Okay, so when you're utilizing this platform, what you should be looking out for, what sort of execution you can do on trades. So essentially, there are 2 types of trades that we tend to focus on, and those are the higher and lower trades. The reason for this, it's very straightforward from an execution point of view. You don't need a stop loss, you don't need to take profit. All you need to get right is the direction of the market, your entry, and also your exit as well. So how does this work? I'm sure a lot of you are aware, but as a refresher, essentially, let's say, for example, we were looking at gold. If you expected the price to go higher, you would enter into a trade for the price to go higher. You would put your time frame, so it could be within 1 hour or 1 day or 1 week, whatever you look at in terms of that price being higher. And then you need to also, of course, just pick the direction there as well. So it would be a case of timing your entry correctly, timing which way you expect the market to move, and also timing your exit there as well. Now, of course, when you take a position on binary, it's all very transparent. You can see what your risk is on the trade. It will show you what your potential profit is on the trade, and it will also show you what you need to put up front as a deposit as well. So it's all very transparent. It will show you what your risk to reward is, how much you can look to make, how much you would be paying on that particular trade. You can see, for example, in the trade there, you've got a deposit of $3,115 US, and the payout of that would be a $6,000 payout on that trade. And you can see here 93% payout on that, and similar with the sell short, the deposit on that is $3,266. the payout is $6,000 and the return will be 84%. Okay, so just to give you an idea of how that works. So what we'll do, guys, any questions, do let me know, but we'll move over to the chart. I'll talk you through what we're anticipating next on gold, silver, a number of other commodities as well. Look at platinum, palladium, and also oil. So what I'll do, I'll switch screens. You should be able to see my screen very shortly, so just let me know if you can see it. Hold on, you should be able to see gold now. And let me know if you can see my chart at the moment. I'm on gold at the moment. The gold chart is currently showing. Hopefully you can still hear me okay. Yeah, fantastic. Thanks, Reese. Okay, good. So if we have a look at the chart at the moment, last week we discussed that gold was consolidating. We were looking for higher prices. We were looking for a breakout higher. We were looking for good follow through over the course of this week. And over the last couple of days is where really we've seen gold get going. Most notably yesterday, we saw gold move over 140 points to the upside, a 14 US dollar move on gold. It broke above 3-month highs. And now today we've continued this follow through and it's now broken above 3.5-month highs. So we've had quite an impressive surge and follow through over the last week here. So ultimately at the moment we continue to add to buy positions, our long positions. We've got several different expiries on those which you can do on binary, so you can range those exits over several days, weeks, depending on what sort of time frame that you're looking at. But overall, I'll take you over to a raw chart so you get an idea of what's happening. In fact, I'll take you over to the weekly chart. I think that's fair to have a look at right now. First thing you want to note on the weekly chart is very clearly we have broken above a significant neckline here on gold. So you can see the price, 1,244 US dollars per ounce, has been breached, and that was very important. So on a weekly charting basis, especially for traders who are trading higher time frames, investors, funds, they tend to look at monthly, weekly, daily. They will be going out higher time frame. They go much bigger picture analysis. They're not stuck in the 5 to 10, 15, 20 minute and 1 hour sort of time frames. They look much bigger picture. So if we have a look at the bigger picture of gold, we've seen this V-shaped reversal pattern follow through, broke out. This is the significant move we've been waiting for. Gold has really caught fire over the last couple of days. There is a relative amount of clean air for gold to continue at this point. It's currently trading at 12.59. We've got some overhead resistance, which is at the 200-day moving average, which approximately sits at 12.62. Beyond that point, if gold can crack above the 200-day moving average, it has the potential to go higher here based on these higher time frames. What do we need to look at? What else do we need to bear in mind at the moment? Okay, so what we also need to look at is gold price in euros. Gold against the euro has led the move in gold versus the US dollar. That's really important to understand. All the way back in December, where we saw gold break out to the upside, first of all, gold versus the euro broke out, and then gold against the US dollar followed through afterwards. And we discussed this last week as well. If you're trading gold versus in US dollars, you need to know what gold versus euro is doing, because often you'll see a disparity between the two. We've seen a couple of days this week where gold versus the US dollar was selling off, but gold versus the euro was going up. So which one should you weight heavier? And essentially, so which one should you pay more attention to? Essentially, gold versus the euro is the leader. So if gold versus the US dollar is going down, but gold versus the euro is going up, you want to deduce from that that ultimately gold against the US dollar, it's likely to be a short-term pullback and it will go up again with gold versus the euro. So gold euro, it's breaking out significantly over the last week. We've cleared above some major territory. Why is it a major level? Well, one of the reasons it's a major level here is because gold euro is starting to make a run for a break above the highs going back to the US election back at the beginning of November. Why is that important? That's a very significant level, and the equivalent of gold versus the US dollar doing that would be gold coming as high as 1,337 US dollars. I mean, that would be a very significant move higher. I'm not saying gold US dollar is going to do that at this point in time, but it would be the equivalent. What gold against the euro, the rally gold versus euro has had, particularly since it cleared above the 200-day moving average, and it's really gaining some strong momentum here. That is how far it followed through. And in fact, on that note, let's go back onto the daily chart, and I will dig a little bit deeper into this for you. So let's just take away some of these trend channels. Let's try and make this really nice and clear, okay? So where gold versus the US dollar is now is where gold euro was about, let's have a look. This was going back to approximately 2 weeks ago. When did we test the 200? That was on the 6th of February, okay? We're now on the 24th of February. That was the point where gold versus the euro reached the 200-day moving average, hit a brick wall at that price, but closed around the daily high. Then it started to follow through, a couple more days of follow through, then some chop, previous resistance at the 200 MA became supportive, and now it's got going again. So again, if we go over to gold versus the US dollar here, gold versus the US dollar is lagging behind in terms of these indicators. So gold US dollar, it's likely, although, you know, we have to just add as much edge to our trades as possible. There's never a guarantee here, but it is likely that we will see gold US dollar come up and hit 1262. That is where the 200-day moving average sits. There's not really much in the way of this price action right now from doing that. It's broken above some key levels today. Daily high here is 1259.87, and it wouldn't take much to pop higher up to that level. You've got a monthly pivot, that zone as well. So we'll be watching that carefully to see how the price does if it once it gets to that level. Okay, so that's an important zone here today. Now, what we want to also pay attention to is if we do hit that level, will it hit that level and reverse, or is it just going to pause for the daily close today? So potentially, is it going to pause, or it could continue to break out today? More than likely, it will pause at that level. And then will we see another breakout higher and the potential for a run up towards the 1300s? So that's the big question here on gold versus the US dollar. It has definitely got going from a higher time frame basis. This weekly chart, weekly V-shaped reversal pattern has really broken out quite significantly over the course of this week. It's been quite a decent move here. So it's yeah, it's had some good follow through. As always, it's not been a clean move, as I'm sure a lot of you are aware of. Over the course of this week, there's been some profit taking. We've seen a bit of fear midweek on the prospect of Janet Yellen's minutes from the FOMC coming out on Wednesday. What was really interesting is we did see some profit taking prior to that. We saw gold drop down and we saw profit taking. It came down to about 12.26. That scared a few traders out at that point. We saw it reverse after the minutes of the FOMC, where they said essentially that they could be increasing interest rates soon. They didn't give any clear timeline for that, although the next FOMC statement is due in mid-March, and that could be a point where we do see obviously some speculation as to whether the Fed do go ahead with an interest rate hike at the March FOMC statement, which is taking place on the 15th of March, Wednesday the 15th. In spite of that, afterwards, after the minutes of the FOMC were released, gold shot back up again, closed near the daily highs. Following day, bit of indecision, but we broke above the previous day's high. And in spite of that, gold has continued to rally, and the US dollar has broken down. So the US dollar has broken down over the last 3 days now. It's pulling back again after it did surge towards the end of last week. Now, what we want to look out for here is, will the US dollar crack below this underlying level of support? And if it does, that really should mean that the precious metals catch fire and they go significantly higher. If the US dollar was to break down at this point, is that an important decision point? So if it was to break down from here, it's got a lot of clean air, especially a break below the 100-day moving average and the 21-day moving average, and on a closing basis. If that's a double top that we've got in the short term here, and we see a reversal and we see the US dollar break down, that would lend a lot of support to the metals to go significantly higher. On the flip side of that, if this pullback retraces into the close and produces a hammer, and then we see a continuation pattern on the US dollar, that will put pressure on gold, silver, and a few other commodities, and therefore we could see just gold stop around this level of resistance and then reverse. What you need to pay attention to as well on the weekly chart, we'll just go over to the weekly, is some trend channels here, which we can just draw in, and you can see where we're coming up to an overhead channel, which sits around the 200-day moving average as well. We'll just put that in a line chart so you can see some of the closes that we've had here as well. And it does marry up to more or less where the price is testing at the moment. So there will be traders who are made aware of that level. They're looking at that trend channel as well. There'll be potentially a fair amount of profit taking ahead around the 1262 zone. But we'll have to see. At the moment, on a weekly basis, this is a very strong move for gold. On a monthly basis, very strong move as well. So with that said, let's move over to one of the other very strong performing markets at this point, and that's silver. Silver's the second best performing commodity of 2017 after palladium. It's up over 14% this year. 14%, incredible gains silver's had so far. So silver has had this move relatively unnoticed. There's not been a lot of big headline news in Reuters, Bloomberg, and so forth about this move. Silver has broken out to 3.5-month highs, but there's been very little news on this, which is interesting. You know why? Because it's been such a slow and steady move. Last year, silver capitulated after Brexit, and we saw this huge move. Within about 4 days, silver gained over 10%. Big move, but then it gave back the move. You don't want to see these big capitulation moves on silver when it has these very fast moves and it has these tremendous breakouts within a very short period of time, within a week or 2 weeks. You often get the opposite. You shortly afterwards, you get the market silver giving back a lot of its gains here. Again, you can see the previous year back in 2015, 3 days of big moves to the upside, consolidates, gives back all the gains. We saw that a lot over 2015, 2016. So you get, again, 3 days, 4 days worth of big gains, then silver gives back all of the gains. Back in January 2015, silver surged within a couple of weeks, hit the 200-day moving average, gave back all the gains. We haven't seen a move like this, steady, consecutive, higher highs, higher lows, higher highs, higher lows, in a long time here on silver. What does that mean? It means traders are slowly but surely adding to positions on a daily basis, but at the same time keeping this under the radar. We're not seeing these big headline news about silver inflows at the moment, but it's just been a slow and steady move, and now silver is up 14% in 2017. So that's very, by itself, that's quite interesting, the way this market has been such a solid move higher. And we'll look at that with the correlation of gold as well. So silver and gold are correlated, of course, and at the moment, both markets have broken out from their 3.5-month highs. Can you trade silver instead of gold? Absolutely. I would suggest that when you're trading gold or silver, just be careful on your risk management, not to overexpose and get into both, because both are strongly correlated to each other. So essentially, if you're trading both together, you're trading a very similar trade. Both are either going to win or lose. So for example, if you went for the price to be higher on gold today and also the price to be higher on silver, if you took both of those trades, you're essentially taking the same trade. They're either going to both go up or both go down. So I'm sure a lot of you are aware of that already, but just to have that on your radar. Silver at the moment, it could be on for what is known as a 3 white soldiers pattern, which is where you get 3 consecutive days of good follow through, and that would result in potentially next week coming up, hitting the monthly pivot, 1, 2, 3, bam, hits the next level of resistance. Similar on gold at the moment as well. So if gold has 3 days of follow through, this is, I'll try and find another example of a 3 white soldiers. It's more common on oil than gold, but it's worth being aware of. It's where you get solid follow through. Normally you start off from where the price opens is near the daily low and it closes at the daily high. The following day it opens, retraces very little, so it just moves solidly all day, closes near the daily high, and then the following day again you open more or less where it closed, and then you don't pull back much and you just follow through again for a third day. That's known as a 3 white soldiers pattern. So just to give you an idea of what that looks like, I'll show you on oil. So oil recently, that's a 3 white soldiers pattern here. Let me see if I've got a raw chart for oil. Might not have a raw chart. Let's have a look. Yeah, that will do. So if we have a look at oil here, that's a 3 white soldiers pattern here. So you've got, let me show you that. 1, 2, 3. Okay, 3 white soldiers. You get that quite often. I mean, sometimes it can be huge. I mean, this is back in December, 1, 2, 3. So you get this 3 days of follow through. See if I can show you anything else on the oil chart. Yeah, another one here. 1, 2, 3. 3 white soldiers. You can Google it, 3 white soldiers. It's a very common term. That's a good one actually here. 3 white soldiers, 1, 2, 3. And then afterwards, the move can start to run out of some steam. But actually, we've got a few here as well. So you go 1, 2, 3, consolidate. Yeah, there's a few on the chart. 1, 2, 3, consolidate, pull back. So you get the idea. 3 white soldiers is what we're starting to, looks like we're building up at the moment on gold. So I just bring you back over to that gold chart. So we're looking at the potential for a 3rd white soldier to develop next week, which could push the price higher up to around the 1280 zone. At the moment, gold's already had a reasonable move so far today. As I said, I'm looking for a move around the 1262 zone at the moment, possibly coming up to around 1265 today. Then we'll be within gold's normal day-to-day range. I suspect we might run out of a little bit of steam then, but then we could look for maybe another move higher on Monday, or this could be a line in the sand. It could be a reversal point. It depends how the price reacts once we get to that zone. So that's what we're looking at on gold at the moment. I'll also just turn your attention to oil again. So going back to oil, we discussed this last week. What's really interesting about oil is the overall range that oil's stuck in at the moment, and we've not been able to have any follow through. So several times oil has tried to break above its overhead resistance channel, and what we're seeing is quite interesting because traders are selling into rallies on oil. So for breakout traders who trade breakouts, what you need to understand and be aware of, and you have to be careful of these bull traps, is that really when you're getting into a buy trade like this, you should wait for the daily close, which will give you the ultimate confirmation, rather than getting in prematurely on a break above resistance, because you would have been chopped up a lot actually over the last month. If you tried to buy on every breakout with oil, look how many failed breakouts there have been where oil has broken above its resistance, and on a weekly chart basis, you can see that. I mean, you would argue, I mean, not you, but some traders out there might say, okay, it broke above this resistance, it's broken above the overhead resistance, so I'm going to buy. That's a signal to buy, but not on a daily closing basis. It isn't, because we haven't closed above that level. You need to be careful, and that's what we look at for confirmation as well. So when you get these breakouts above resistance, you want to close above that level of resistance. Otherwise, you can get caught in a false breakout, which is essentially known as a bull trap, and then you see a reversal, and then you get stuck in a trade where you bought right at the high only to see the market reverse. I would suggest, again, it's just a battle between the bulls and the bears at the moment. We've had this battle going on all of 2017. There's no real decisive power at the moment. You could argue that overall we're in an upward trend. You've got a lot of the moving averages are fanning to the upside, and it looks more likely to go up than down. But I would also suggest that the fact that every single rally is a failed rally so far, and we're seeing sellers come into rallies at the moment, would indicate that the bears are starting to get into control of this market, in the sense that the buyers out there are unable to force the price higher, even with the fact that if you have a look at the commitment of traders data, which shows us the amount of hedge funds, and essentially we can see commercials and also hedge funds, what their overall position is in this market, in the oil market at the moment. And going to that data, we've got a level where really we're at a record high in terms of the amount of long positions in this market at the moment. And that would mean that really we're running out of buyers at the moment. So everybody who wants to be buying oil at the moment is buying. There's a record amount of long positions in this market right now. So really the only other alternative now is traders who are long to start coming out of the trade and start getting tired of this, realizing that, okay, the trade is not going to deliver within the timeline that they wanted to or expected it to deliver. They start to unwind their position because they've been in potentially a buy trade going back to the beginning of the year, expecting a breakout, holding on to a long. Nothing is happening, whilst gold is skyrocketing. Silver's up 14%, gold is up 14%, the S&P 500, the Dow Jones, they've all been rallying significantly. And if you've just held your funds in oil expecting it to go up, you've missed out on loads of opportunities. So therefore you might start to unwind your positions on oil and think, okay, where should I be positioning myself? Actually, I should probably be buying gold, or I should be putting some capital into silver or in platinum or palladium, and come out of some of my position in oil. So that's what we could start to see in the days and weeks to come here. If oil has the inability to continue to break out and follow through, we could see oil start to unwind the position and break down lower. And that's what I'm looking at, this potential for a breakdown. If we do get a break back below the 50-day moving average, the monthly pivot, I would suspect that we could then start to see more follow through. Now, we still have a lot of fundamentals which are changing the oil market on a daily basis from a supply and demand point of view. There's always that factor in the background where it can cause sudden surges, it can cause sudden moves to the downside as well. So it's just something to be aware of. Oil is much more fundamentally driven than some of the other markets that we trade, which are more based on seasonality, technicals, cycles, and so forth. Oil is one of the most fundamentally driven markets out there. It's also the #1 most heavily traded commodity in the world. So as such, provides good day trading opportunities, good amount of volatility normally, but at this point, we've been consolidating within a very tight range for the last 2 weeks. We're waiting for a resolution. So what does that mean? What sort of trades could we look at? Well, if we do on a closing basis get a break above, a close above $55 per barrel, that is where we could see oil really start to pick up momentum to the upside. Then I would look to buy it. If we get a break and a close back below $53.40 per barrel, I'm a seller of oil and I'm interested in selling. So essentially the zones which I would be looking at would be a break and a close back below 54, 53 and 40. So I'm looking for a break and a close just below this level of support. And to the upside here, I'd look for a break and close above resistance. Personally, that's what I would be looking at in terms of trading opportunities here to buy or sell. Now moving over to also platinum and palladium here. If we have a look at palladium, palladium is a top performing commodity of 2017. It's up even more than silver at the moment. It's been consolidating for a while. I would suggest there's not really too much to do here on palladium unless it can breach above the weekly highs. If it can clear above 785, we should start to see more follow through and a breach above the 795 zone, and then we could really start to break out higher after breaching the 18-month highs. That's definitely a zone that you want to be aware of. So a break above 795 to 800 could lead to a significant surge higher here. So I would look out for that on palladium. And also if you go over to platinum, you can see it's had quite a nice spike higher. We opened up a binary trade up on this a couple of days back after it broke above the resistance as well. It's quite good to trade palladium and platinum on binary because you're not paying big spreads, which you can do on other platforms when you're trading, for example, CFDs, for example, which require larger spreads when you trade platinum on palladium because they're more illiquid than other markets. They tend to require a larger spread when you trade them, but on binary, it's quite reasonable the way we trade this. And then very simply, you just want to either pick for the price to go higher or lower and give the duration and the time frame. So platinum, very much like gold and silver, is surging at the moment. It looks like we're on the verge of breaking above also the 3-month highs here. So let's have a look. The high 1028, what did we reach today? 1028.36. We've just about clipped it, so we have actually got above the high going back to February here. So at the moment, let's have a look at a weekly chart. It's probably looking good on a weekly. Yep, there we go. So on a weekly chart, it's on the verge of a breakout here. Very solid move on a weekly chart here as well. Looks like, at the moment anyway, looks like we could get further upside on this market too. So look for the potential for some follow through here if it can get a break above that level. So I would keep that on the radar as well. So hopefully that fills you in on what's going on with commodities at the moment. Again, just be aware that the top performing commodities at the moment are the metals, platinum, palladium, silver are the top performers, and gold also has had a really strong move. It's broken above the 3.5-month highs. You want to go where there's a lot of volatility, where there's a lot of volume, where there's a lot of liquidity, and as such right now that happens to be in the metals. There's quite a lot of opportunity that you don't want to miss out on. Now with that said, if you would like to find out more how to actually gain access to our trades that we take at the Gold and Silver Club every week, let me just show you some of the trades that we've had over the last week, our portfolio performance using our exclusive research-driven strategy. So we're taking advantage of a sell short earlier on this week where we saw another rally get sold into, just a very simple trade, entry at 56.25 for the price to be lower the same day. This is a 4-hour chart, and we just sold and exited after our expiry, and we've made a profit, good profit with just that sell short as well. Again, just going back to when you're buying or selling, it's very clear on binary. When you put your deposit, you know what your deposit is, you know what your payout is, you know what your risk is on the trade, you know what your risk to reward is. Everything is very transparent when you take a trade, so you know what your upfront risk is and your payout is as well on every trade. We continue to be in a buy position on gold. We opened that up when we breached above 1,236. We got back in to another breakout trade actually on Wednesday. We already had a position at 12.36, but we had another opportunity to re-enter, and we've got staggered exits on that. One of the closes is today for the price to close higher than 12.36. We have a number of other trades which are expiring next week as well for our gold trade. Essentially, as long as the price closes above 12.36, we'll win those trades. And we've also got a palladium trade that we opened up yesterday after we broke above 1,001, which will expire next week as well, just for the price to close higher. So very straightforward, very easy to implement these sorts of trades if you know what you're doing. But again, you need to know what your risk to reward is up front as well. Now, again, if you would like to get access to the private members live trading room at the Gold and Silver Club, all you need to do is you go to www.jointhegoldandsilverclub.com. I'll put the link in the description for you. Okay, that's the link. And once you've completed the application form, we will get in touch with you about your membership. So whether you're a new trader, you just want to develop a solid understanding of the markets, if you're completely new, you just really want to build a solid foundation, we can take you step by step through that process and fast track your results, or even if you're an experienced trader, but you just want to get more consistency, or it might be that you're experienced with Forex or stocks, but you've got limited experience trading gold, silver, platinum, palladium, for example. Again, I would suggest, you make an application to join us at the Gold and Silver Club. This is what it includes by being a member. You get access to our trading strategies and our online training course, which will take you step by step through the quick start guide to commodities and then all of our strategies. We also provide trading rooms during the week, which are recorded as well, which go through lots of Q&A, but our open positions, closed positions, trade management, new trades, fundamentals, seasonality, cycles. We go into depth into commodities. We provide all of our trades are sent out real time, so we give you notifications so you don't miss out on trades. We give you exact details of where we're going to enter, where we're exiting, where we place our stop loss on each trade. We provide you with the inside tracks, a week ahead trading plan, and a watch list for the week ahead. We also provide VIP support and mentoring, which you can gain access to by being a member, and you get access to our Private Traders Academy members website. So again, you get live trading rooms during the week, which are also recorded. You get access to our email and SMS notifications so you don't miss out on trading opportunities. You get access to our commodity research and market insights every week, which will give you really a lot of detail and background behind why we're taking some of the trades, and exclusive access to our research and market insights to help you get an edge in the markets. And also, again, we provide all of the following. So again, if you'd like to make an application to join us at the Gold and Silver Club, all you need to do is go to www.jointhegoldensilverclub.com. If you like what you saw today, if you'd like to get more on a daily basis, more of this rather than just once a week on the Commodities Corner, make sure you make an application to join us. And of course, I very much look forward to working with you, as well as all of our traders at the Gold and Silver Club. Okay, so with that, guys, good trading. Have a profitable one. All the best. Have a good Friday, and have a fantastic weekend. And with that, we'll see you on the next one. Okay, thanks, everybody. Take care. All the best. We'll speak real soon. Cheers. Bye-bye.